Today we're talking about the Fundability Roadmap. We're going to talk about the things you need to know about fundability to set up your business the right way to being able to get credit and to be able to get financing as well. So if you don't mind, tell me where you're coming in from. I always like to say hello and give you a shout out. So what we're going to dive into today is what is fundability, why it works, what you need to know to set your business up the right way. So overall, fundability is really your ability to get money from lenders, credit issuers, etc. Right? We found that there's over 125 factors that affect your ability to get money, and when you do this the right way and build strong fundability, well, it radically increases your chance of getting funding. So look, we've helped 50,000 people through the process of business credit financing, and this is what we found. The vast majority that are not denied because you don't qualify. You're not getting denied because your credit score is bad or your income isn't enough. In more cases than not, what happens is you just don't meet the basic criteria that lenders and credit issuers are looking at. They're looking to prevent fraud. They're looking to lend or issue credit to legitimate, credible businesses. And this criteria they have that they want you to meet, you don't meet it. It's why you're getting denied. Now, on the other side, once you figure this out and make even the slightest change, it all of a sudden starts taking these denials to approvals. And anybody that follows me knows that I share a lot of these case studies. One of the first ones that comes to mind are friends of mine, the samples. And they came in, got denied for an Amex, got denied for a loan at the bank. And then what we found was what was on their application didn't match what was on their Secretary of State. By the way, very common problem. People come in, they set up their business in the Secretary of State, then they get their website, then they get their email, their phone number, their address, and they never go back and update the information. They don't even think about it. And so then what happens is the lender looks at the application and does a real basic check just to make sure that the applicant is real. It's not fraudulent. See, we forget that. We forget that lenders deal with more fraudulent applications than real ones. So their first check is this real or fraud? Well, in order to validate that, they take the information on the app and they just simply bring it over and make sure that that company really exists. It's a basic check. But when they go to the Secretary of State, they find the company name on the applications, the same as the Secretary of State, but nothing else matches. The email address, the phone number, it's not congruent. So what happens at this point is the lender immediately red flags that application as fraud. Now it goes in for a manual underwriting review, and now it's over. You're fighting an uphill battle. Because what happens is lenders and credit issuers, the underwriters, think about this. The underwriter gets an application from the system that says it's fraud. Do you know how much guts that underwriter has to have to trump the system and say it's not fraud, it's real? And they got everything to lose by doing that and nothing to gain. So in more cases than not, the minute it gets put to a manual underwriting review in any case, it's hugely problematic. This is what fundability is. Fundability is like a series of check marks that a computer is going through your application and issuing. And instead of a check, if it puts an X, an alert, and there's these alerts, then what happens, even one of those alerts or the compounding of these alerts triggers a computer to automatically deny or push for manual review, which almost always ends up in a denial anyways. So the samples in this case, we just said, hey, this is a mismatch. Let's fix the Secretary of State data. Let's update it. Now the two are the same. Same one change, uno change. We send the change back to the American Express. We send it back to lender, and they get approved for a no-limit Amex card and get approved for the loan they were previously denied for because of one change. Because we updated their Secretary of State data. So that is one of 125 fundability factors. And helping hundreds and thousands and tens of thousands of borrowers through this process, this is what we found, is the vast majority of people aren't denied because they don't qualify. They're just simply being denied because they actually don't meet this criteria that lenders and credit issuers have. And when they do meet the criteria, they get approved. So that's really what fundability is when you build strong fundability, then it really radically increases your chance of getting funding. It increases your ability to be able to get the funding you're looking for. So if you don't mind, give me a shout out. Tell me where you're coming in from. And good afternoon, Cesar. Thanks for coming in, saying hello. I appreciate it. And hello coming in from Facebook. Everybody, thanks for saying hello. Tell me a shout out for where you're from. Brian, hello from Triad of Success LLC in Colorado Springs. Thanks for coming in, everybody. Thanks for saying hello. We are using a brand new streaming software right now. So if you see me looking left, I'm still trying to kind of find my way around here. I found a chat, but I'm still looking for some other info. So if you see me looking over, I'm just trying to kind of get a look at the new look of our back office. So let's look at fundability. We break it into 5 different categories. And what you hear from me a lot is 1, Fundable Foundation. And a lot of people think that the foundation part is fundability. It's not. It's one of 5 components of fundability. We also look at business credit reports. We also look at personal credit reports. We also look at the application process and what you're putting on applications and what lenders are asking you for and why they're asking for that, right? So an example of that is bank statements. There's a reason they ask for bank statements. They want to see that you have a lot of deposits. They want to see you have positive cash flow. They want to see you have more money coming in than going out, that you have a positive ending bank balance. There's like 5 things they look for specifically because you're supplying those bank statements. So same with financials. Sometimes they ask for them. Sometimes they don't. What triggers their request for financials? What are they looking for on those financials? And the more you understand this, the better you're going to be. And I give it a little laugh because people in my life will tell you that you never want to go anywhere where I fill out an application, because like it should take 2 minutes and it takes me an hour. Because literally I'll look at a line and I'll just pause because I'm trying to think about why they're asking me the question. I don't just submit a document. I want to know, why are they asking me for this? What are they going to look for on this? Because in a lot of cases, you can answer multiple different ways, and one way will get you denied and one way will get you approved. And I laugh about that because literally I'll be with people and they're like, what is taking you so long? It's your name. I'll be like, I don't know. There's a million things they could be asking me this for. Why are they even asking for my middle name? I wonder what they're going to do with that. Now, I know enough to know that they're checking the secretary. I know that they're checking LexisNexis. I know they're checking check systems. I know these systems that they're checking that average business owners don't know. And that's exactly what fundability is about, is decoding all that so you know that information as well. So the journey to fundability, you got to control what you can. You got to try to mitigate what you cannot. And then the bumps of the road won't hurt so bad. So look, there's a lot of basic stuff you could fix right now today. Through this training, I'm going to teach you stuff you're like, oh man, didn't know that. Fix it. Boom, problem solved. There's other stuff you just can't. You can't solve. It's wrong. It's incorrect. You did it the wrong way. It's not going to get better, right? Maybe you're a real estate agent that doesn't have a lot of deposits in your bank account. There's nothing you can do about that. But what you can do is you can mitigate what you can't control. Okay. And this is what we call in the lending world compensating factors. And I have made a living for decades helping people that didn't think they could get money. And it's because I'm really, really good at understanding compensating factors. I'm really good at saying, just like magician, hey, look at this while something else is going on over here. I'm really good at going to an underwriter and going, why are you saying no because of this? Look at all of these things here. And the more value I put in these things, the less they look at this, and the more they start looking at where the value is. This is what we mean by mitigate what you cannot. There are things you can be like, oh, need to change. And there are things like, can't change that. But I can create these compensating factors and compensate. And if I'm ever in a situation where I have to explain, I said to the lender, hey, look, here's the deal. Okay, I used to get so many subprime deals done in the mortgage business because I was really good at this. Okay, FHA would let you write letters. I'm a good letter writer. And my letter writing would be 3 pages of all these compensating factors of things they don't know about and can't control. Okay, and I know exactly how to position it where that borrower has more credibility. And that really is what fundability is. It's just giving you more credibility. So the Fundable Foundation is where it starts, right? It's controllable. I mean, almost everything in the foundational aspect of fundability, you can control. It's just how you set up and structure the business. You just have to know what they want and then structure it that way. It's like an open book test where if you know what the question is and you have access to the answer, you go get the answer and give them the answer that they want to get. So this is going to help you access business credit accounts. It's going to help you access alternative funding. So think of it like preparing for a trip. It's like it gives you everything you need to then improve the other aspects of fundability, okay? So we start with things like your business name. You got to register it with the Secretary of State. You probably already know that. It's how we set up a business. You got to keep it away from high-risk industries. This is a mistake that, no exaggeration, 99% of business owners I talk to, 99% do not have this part right. They don't even know what their NAICS code is. And I'll prove it to you. Tell me what your NAICS code is. So just give me a shout out and say, hey, here's my NAICS code. So an NAICS code is basically knowing the industry that you're in. And these industries are what tells the IRS, the Secretary of State, the lenders, credit issuers, insurance companies, the credit bureaus. They all treat you differently based on the industry that you're in. So you got to know the name of the business. You got to make sure that you know your NAICS. You got to make sure your name doesn't reflect you're in a high risk NAICS code. And you got to make your business easier for lenders to find online and offline. Okay. You got to make sure you have a name that's easy for them to actually be able to locate. So you want to keep it consistent too. You got to make sure that everything is consistent everywhere. So if you have a DBA, if you haven't incorporated, a lot of people do that. Are you Credit Suite or are you Credit Suite Incorporated? There's a difference between Credit Suite and Credit Suite Inc. And if a lender can't validate that one in the same are the same, then they think it's two different. As a matter of fact, the credit bureaus do the same thing. It's why they create multiple credit profiles for you. They think you're multiple businesses. So you got to figure this out. You got to make sure your business name's consistent everywhere. You got to know what your high-risk industries to avoid. And you've got to come in and you got to make sure that your actual name doesn't reflect you're in a high-risk industry. Now, this isn't too difficult to do, and I'm going to go back and give some people some shout-out where I'm going to show you exactly how to do this. Okay, and by the way, George is in the house. Nicole and says, is it Cesar? Sorry, I'm not sure. From Austin, Texas. What's up? Lachelle from Scottsdale, Arizona is in the house. Huais from Atlanta is in the house. Hey there. Hey, thanks for saying hello. And Business Guy, what up, man? Thanks for coming in. And Cream de la Coach Exotics. I love that. That's awesome. That's an awesome name. Good afternoon. So far, one has typed in their NAICS. And again, I'll keep coming back to this because you need to understand why it's so important. So let me just do a simple check and I'll show you. So NAICS right here, if we're going to go to NAICS code, we can go to NAICS.com. Okay, should be right here. It's real easy. We can come in and do a search. And again, this happened on a live stream the other day. Somebody said, what's the NAICS for transportation? And I said, let me give you an example. Here's transportation. When I pull it up, if you count, I gave up, I think, at 90. But there was about 100 subcategories of transportation. So this is why you can't tell a banker that you're in transportation. You're forcing them to choose each one of these. Some are high risk and some are low risk. So you want to know that. Another reason you want to know that is just how the credit bureaus actually look at you. So I'll show you exactly what I'm talking about because you will see that you can actually be issued and you will be issued and treated badly by the credit bureaus just because you don't have this figured out. You have the wrong NAICS that reflects that you're in a high-risk industry. So here's somebody, for example, that has a blank credit report. It's blank. I'm at the bottom. There's nothing here. These are all zeros. There would usually be trade lines, trade accounts here. There is none because the person has no credit, nothing, empty, right? But we see that their score is very low. When it comes to being high risk, it's about a high risk as you can get. Okay, this score predicts the likelihood of financial stability within the next 12 months. So what it's basically saying, this score literally depicts your risk of filing bankruptcy, closing your doors, going out of business. That's what this score actually reflects. And we can see here, first of all, the credit bureaus doesn't like that this person has a credit, has a business, and doesn't have any trade lines. You can't not build business credit because the minute the bureaus know that happens, they automatically start giving you low scores. But look at this, risk associated with business type and risk associated with company's industry sector. So they're telling you 2 of the 4 reasons they don't like the business is because of the type of business and industry. So this is the issue, is that if you're seen as a high-risk industry when you're not, then lenders, credit issuers, insurance companies, they all charge you considerably more than what you should be paid, or they don't approve you because of that. So you need to go and figure this out. You need to figure out that you are a rail transportation company, NAICS 4821. And whenever anybody ever asks you for your industry, you need to put rail transportation, colon, or whatever we call these little half circle things. NAICS 4821. There's no question that what industry you're in there. Now, how do we know that that's not high risk? Everybody says, well, is my industry high risk? I'm like, I don't know. I don't have all that memorized, right? But what I can do is I can come in and go high risk NAICS, and a simple Google search will show me a list from NAICS.com of high risk. And then you'll also find a detailed blog post that we did on how to avoid high risk NAICS codes. And we just walk through every single thing you need to know about it. So that way you can come in and get this thing right and avoid them. Okay, so that way you can make sure you have the right industry code. Now, the other reason I bring this up, and I mentioned this before, is that you have to keep in mind there's oftentimes you can be one of multiple industries. So, for example, Credit Suite, we provide education and we're teaching right now, right? And we also are in financial services. We help with business loans and business credit. And we're also a software company. Everybody that buys something from us is buying our business finance suite. They're buying our software, which improves fundability, builds business credit, gets financing, right? So which of the three do we choose? Because we can choose. We could be any of those three. We choose software. And the reason we choose software is that financial services is high risk. We don't want that. And on the other side, education doesn't have a good multiple if we ever want to get, raise money for the business, whatever. We want the business to be worth as much. But software is a winner for us. It's not high risk. Lenders and credit issuers don't give us a hard time because of that. And then at the exact same time, we also get a higher multiple for our business. So you can oftentimes choose what NAICS you have. You want to make sure your name doesn't reflect you're in a high NAICS, and you want to make sure that name that you have, whether it has ink in it or not, actually across the board is consistent everywhere it's listed. And this means online, offline, utility statements, bank statements. It means Yellow Pages, 411, Yelp, everywhere you can find it. We also got to make sure you have a real deliverable physical address. So what lenders and credit issuers want to see is a commercial building that you're in. They want to see, and then by the way, they're not doing a check. Their computers automatically know. They automatically know whether or not you're a commercial address or residential, or it's a P.O. box, a mailbox, they call it. So a UPS address, iPostal, P.O. boxes from the P.O. those are mailboxes. They just hate those things. They hate them. Okay, I want to use another word. I teach my kids that hate is a bad word. I don't even like the word hate, but they hate them. Because here's why. Who are you? Who do you think you are coming to get money for your business when you won't even tell them where your business operates out of? That's not my perspective. That's their perspective. Their perspective is, why would we give you money if you don't even tell us where you operate the business out of? We know what you're giving us is a mailbox. So they don't like them. And what happened in the 80s was that these mailboxes were put into this database for the government's use. And now, of course, lenders, credit issuers have access to it, and they use it for evil, not for good. So we want to stay out of that box completely. We got to stay away from iPostal. We got to stay away from UPS. We got to stay away from mail any kind of mailbox service, including P.O. box. Now, our best options are real commercial address, like in a real commercial building. But oftentimes we don't need the office space. We don't need to work out of an office. We don't need a retail location. So then option 2 is you want to go with what's called a virtual office. Different than a virtual address. A virtual office is delivered by places like Alliance. It's delivered by places like Regis. It's delivered by places like, Regis, Da Vinci, Alliance are some of the best ones that are out there. I like Alliance. Alliance is one of the better ones to go with. And you can see right here that there's a lot of cool things you could do with Alliance. You can get all different kinds of services. Keep in mind, I'm not making an affiliate commission here. I'm not giving you a link. I'm just telling you to go here. Not because it pays me anything, just because this is the best way that we found to get the results. So these are virtual offices. Notice, not virtual address, virtual offices. You physically have an address that makes it look like you are in a big high-rise building even when you're not. So you want to go through those solutions and use a home address as last resort. Home address isn't bad. A lot of us work from home. But the thing is that a home address in the system, a residential indicator, will tell the lender you're just not as credible as if you had a commercial indicator. Now, that might make it harder to get approved. It might make it, higher interest rates. It might mean you don't get approved at all. Okay, Amazon doesn't care. You get an Amazon corporate card with the home address, no problem. Walmart does. You're not going to get a Walmart corporate credit card with the home address. So some sources will approve you, some won't. Some will charge you higher rates, some won't. But this is a virtual address is one of those things, or virtual office is one of those things that can get you around the solution. And by the way, let me revert back. That's a thing you need to know about fundability. What I'm teaching you today, some lenders care about, some don't. Some credit issuers care about, some don't. They all care about some of the stuff. Just some care about some of the stuff and some don't care about the other stuff. And a virtual address or an address is an example. Walmart won't approve you if you use a home address. Amazon doesn't care and they will. This is the way the lending and credit issuing game works, is that if you do everything I'm showing you and your fundability is beautiful, right? If it's great, then what happens is you're going to have the easiest time of getting approved for the most sources of money. If it's not, and you're like, I'm going to skip the address part, I'm going to skip the congruency part, making sure it's all, then fewer and fewer and fewer and fewer will approve you, and higher and higher and higher rates you'll pay, and less and less and less amount of approvals you'll get. Your approvals get lower, your rates get higher if you get approved at all. And that's not my goal. My goal is to get you the most money at the best terms. You got to have an EIN number. Believe it or not, you could be a sole proprietor and not have an EIN number, but you need to have an EIN. If you're ever going to build business credit, you got to have an EIN to be able to do so. And you can get it for free at irs.gov. Kay-Ann Hayes, thanks for coming in and saying hello. I appreciate you giving me a shout out and saying hi. And Kelly Adams, good afternoon. Franco knows his NAICS. Good job. And Killa, hey, I missed your call, but I'm glad to see you on the live chat. Thanks for coming in. I appreciate you saying hello. And Brian, yes, I use Alliance. Alliance is a great source to go through. I think you get a lot of success with using it. Business entity. You got to choose the right entity. Corporation gives you the most credibility. That's simple. If you don't want to be a corporation, then choose an LLC over whatever else is that you're going with. Have an LLC. They like corporations the best. They like LLCs the second best. People ask me, do you choose S Corp, C Corp? That depends on how big your business is. There's a lot of options there. You're better to talk to an accountant. I'm not an accountant. This is an accounting advice, but I'll tell you from running a lot of businesses in my time, you typically start with an S corporation and then you move to a C Corp typically as the business gets bigger. That's usually the trajectory that most take in the corporation world. You got to have a phone number. It can be a voice over IP. You can get it with Bring Central. You can get it with Freedom Voice. There's plenty of these options out there. Toll free is the best. It gives you the most credibility. You got to stay away from a cell phone, a home phone. That should never be on an application for credit or financing. You should never even be linked to your business, because the computers that we all have nowadays automatically tell us. Our finance suite does the same thing. It automatically depicts whether or not it's a residential phone or a mobile phone or a voice over IP or a business line. It does. It just knows that. So you want to make sure that you avoid home phone, avoid mobile phone, and you also have got to get this phone number listed with 411. This is one of the basic checks that almost all of these sources look at. And here's why. There is no 411.com. It's not 411. It's not the same. I can't go to 411.com and list my own business. 411 naturally, organically picks up your business because it's in Google Places My Business. It's in Yelp. It's in Yellow Pages. So 411 organically, their crawlers pick it up from these other sources. So usually to get to that point, you've got to be established. Okay. You've got to actually have an established 411 listing. It's what tells lenders, credit issuers, amongst many others, that you really have a legitimate business and you can't fake it. So because of that, they really like this check. Now you can go to a place called listyourself.net, and List Yourself is the only place I've ever found that you can list yourself a 411. There's a cost to do it the right way with them. Our clients get this for free. We pay for it for them because it's so valuable that it's something you should have. You don't need a business license, but if you can get one, get one. There are sources like Granger that will help you build an account, or that will help you build business credit, that automatically will give you a $2,500 credit line just because you have a license. People don't take the step to get a license if you don't have a real business. So I like to not only have a license, but submit it for applications for credit financing. Even when they don't ask for it, still submit it. It just shows you as more legitimate and credible than a business that doesn't. Do you have to have one? Do you need one? Here's one of the easiest ways to get one. If I just type in a county here in Florida, Pasco County, and I say business license, right? Then it tells me right away, hey, here's a license I can get in this county. Now, some counties have them, some counties don't, but it's stupid. It's usually super cheap to be able to get one of these things. And again, the nice thing is that it just gives you a lot of credibility. So if you can get one and it's cheap, then go ahead and get one. This is a 20-minute application, I don't know how much it is. It doesn't tell me, but again, all you do is do a simple search for your county. In a lot of cases, you'll find a place you can get a business license. Set up your website, set up your professional email as well. Your website should be your company name. If your company's name is ABC Company, your website should be abccompany.com. That one link gives you a lot of credibility. So you want to not even start a business from the beginning if you can't get the domain for that business. Okay. And I'm actually helping a buddy launch a business right now. And I'm in that brainstorming phase. And my brainstorming phase is to think of unique names that most people wouldn't have thought of or taken. And I immediately go to GoDaddy and I just Google the name to see if it's available. Or I run a search on GoDaddy. If it's not available, I just skip past it. Like, I would not get a business name if the domain wasn't available. And if I come down and I'm like, oh, that sounds like a good name, domain search, domain is available, I immediately get that domain with GoDaddy. Okay, now, sometimes you got a really good idea and it costs $5, $6, $7, $10,000. You have to decide if it's worth that much money to you. And oftentimes I think about ones that aren't as common that you'd think about and grab those names. So, for example, one of the names that we created here at Credit Suite, the brand that we don't do a lot with, but we will, is called Wentworth Price. Wentworth Price doesn't mean anything. It's completely made up. But we're able to get all the assets for that domain because nobody's thought of that name because it was just completely made up. But it sounds credible. It sounds legit. It sounds high-end name. So that's what you got to do is you just got to think about names you can get the actual domain. And then you've got to use an actual professional email address. So creditsuite.com, info@creditsuite. You don't want to use Gmail, AOL. Don't get me wrong. You're going to need to set up a Gmail for the business probably. If you're going to do, set up with Google and Google My Business and a lot of that stuff, they're going to want you to have a Gmail. But I use everywhere the business is listed the same email address, and it needs to be congruent with your domain as well. Okay, website hosting, you can get that just about anywhere. I like GoDaddy. That's just my place. Set up a business bank account, set it up in your name. Here's my order. After I set up the entity, I go get the EIN, I go get my bank account. I do that as this one action. I mean, literally, it just happens in those three same day. I'm not even going to get my name set up with the Secretary of State unless I have time to get my EIN and set up my bank account. It's that important to be able to set up the bank account as close to the open date of the business as possible. A lot of reasons for this. There are secret credit scores most business owners know nothing about, check systems, bank ratings, for example, that lenders and credit issuers look at to determine if you should be lent money, how much you get, rates and terms you'll pay. And those things take into account how long your bank account's been open for. So the longer your bank account is open for, the easier it's going to be for you to get money. Cash flow financing, merchant cash advances, revenue lending, term loans, a lot of this kind of financing, they want to see how long your bank account's been open for. There's a lot of funding that you can get just because you've had your bank account open and have had money going in there for 6 months. So it opens up a lot of doors for funding to get that account set up. And you've got to make sure that that name on that business bank account's the same as everything. Everything has to be congruent. Name, address, phone number, same there. And you got to know you're in the ICS before you walk into your bank too, because they're going to ask you what industry you're in. And you're like, I'm in consulting. And then they just randomly choose what industry you're in. And here's the problem. All these banks communicate together. They're all part of one big central organization that shares data. Here, I'll show you that right now. And so this is why you've got to get that figured out before you actually walk in and before you actually walk into your bank. Because if you don't, then what happens is that all banks have the wrong information, okay? So you've got to make sure that you actually have this figured out and that you know exactly what your bank industry is, because there's something called the SBFE. You can find out more about them at sbfe.org. But SBFE is every major credit card company and every major bank except for I think one is a member of SBFE. And they all openly share information with each other. So when you go get a Wells Fargo bank account and you say, I'm in industry ABCDY, whatever, and then what happens and what you don't know is Wells Fargo puts that in SBFE and it's shared everywhere. Now the credit bureaus have it. All lenders have it. Now everybody's going to see you as being in whatever industry you set. So if you went and told your banker, I'm in consulting, and they put you in a high-risk categories, now the bureaus think you're high risk. Now all the other banks think that you're high risk. It spreads like wildfire behind the scenes, and you don't even know that the whole thing is going down. Most people don't even know that these guys are openly sharing information. So you've got to make sure that you start building a bank account as soon as possible. You manage your bank account history, more money going in than going out. Don't overdraw the account. Like, make sure it looks like you're responsible. Like, if you just make sure it looks like you're responsible, that'll go a long way to helping you get financing. And again, when you set it up by telling the bank the right information, then what happens is that will then give you what you need to be able to come in and to be able to build a lot of credibility for your business on the end of the banking system. And hello from Wisconsin. Thanks for coming in. And Mark says, took me months to discover best business name. Yeah, I agree. Granger's great. Somebody's asking about Granger. Granger is a credit issuer. They sell outdoor workwear, stuff like that. They're a great account to start building initial business credit. And yes, it's Grainger. That's correct spelling. And Mark says, took me months to discover the best business name. I'm the same way. Like I'm right now helping a buddy build a business. I'm already in the phases of helping him map out the step-by-step of what he needs to do it. And then in the back of my head, I just go through business names. I just think through things and run a domain search. Like I'll be in the middle of a conversation with somebody, but oh, wait, I got to check something quick. And see if the business name is available. I'm just always processing to find the right business name. And as Mark says here, let me see if I can share Mark on the screen because I like that comment. Yep, show. And as Mark is showing here, I'm the same way. It usually can take months to really find a good business name where the actual domain is available. So I appreciate you pointing that out. So get set up with the business credit reporting agencies. Get a DUNS number from Dun & Bradstreet. A lot's been said recently about DUNS number going away. A lot's been said recently about this UEI number that's replacing the DUNS for the government. It's not replacing DUNS. DUNS isn't going away. Okay, what's happened is that Dun & Bradstreet, I don't even know what happened. I can't speak to that. But I can only say that Dun & Bradstreet radically increased the prices to the government that the government was paying them for DUNS numbers. Like it went from like 2 million to like 16 million. It was something ridiculous. And ultimately somebody had to go through Dun & Bradstreet's website to be able to get their DUNS number to be a contractor for the U.S. government. Okay. And so then what happened was Dun & Bradstreet wanted to try to charge money for credit monitoring. And they wanted to try to tell people that you had to get this credit builder program, okay, in order to be able to get the DUNS number. They went through all this hokey crap, and it's not my opinion. I mean, here, I'll show you exactly what I'm talking about. You can just come right here and just do basic search here, FTC and DNB. And you can see right here what's going on. I mean, this is pretty recent stuff, okay? This is January 13th, 2022. The Dun & Bradstreet, deceased small business. I've been saying this for years. I've been trying to tell everybody this exact same thing happens in their scam and how it works. And enough people complained, and there's some pretty serious repercussions. It's worth looking into this because this could actually help you get some things for free from Dun & Bradstreet because they're now required to be compliant because of their misdeeds. Okay, but here's the problem. DNB is trying to tell people that they got to pay to get DUNS numbers and all this other stuff. There's all these issues. And so the government's finally like, I'm done. I'm done with this. We're going to come back and we're going to create our own number. Okay, and now we have this UEI. But you got to keep in mind, this doesn't matter to us for business credibility. We don't care about this UEI. All the UEI is for is just in the case that you're actually going to work for the government. Like if you require to have an identifying number with the government. So it's not replacing DUNS. DUNS is used worldwide. Even though the government in the United States replaced it, the United Nations, the Australian government, over 50 global trade organizations use DUNS. A lot of people around the world use DUNS as the unique identifier of a business. Their 9-digit number over the UEI, which will be used by the United States government, which is 12 digits. So DUNS ain't going away. Okay? You know I'm serious if I say the word ain't. DUNS ain't going away. Okay, it's here to stay. It may never go away. The thing's been around for like, I don't know, long time. I don't even remember how long it's been around, 70 plus years, something. So this is something that's still here. Just because of this UEI talk doesn't mean you don't need it. You need it. It's the number one step with getting set up with Dun & Bradstreet. If you don't have this, you'll never get a PAYDEX score. Okay, in order to get a PAYDEX score, which is the number one credit score used in the business world and comes from Dun & Bradstreet, you must have a DUNS number. You must have 3 accounts reporting to them. If you don't have one of those 2 things, you will not actually be able to set up a credit report with Dun & Bradstreet. So you got to get this DUNS number. You can get it for free. You can go to creditsuite.com/DUNS. And right there, that quick link will give you exactly what you need in order to be able to get your actual DUNS number. Now, you also need to know that a Fundable Foundation allows for business credit building. Remember, if I pulled up that matrix, and I don't think I still have that pulled up, but if I had that matrix, I showed you 5 categories of fundability. Fundable Foundation, what I just went through was 1. Remember, another was business credit reporting. So the Fundable Foundation is the key to being able to now come in and start getting business credit. It's the key to being able to set yourself up to start getting business credit. Then you can start using business credit to grow the business. I always say that business credit is how you can get the business to fund itself. And what I mean by that is instead of relying on your personal guarantees and your personal credit history and your personal assets to collateralize debt, by building business credit, you give the business an asset that makes it fundable in itself. So you're creating the business's ability for it to fund itself. Warning, disclaimer. I'm not saying you're going to go get an SBA loan with no guarantee or credit check just because you build business credit. Higher end loans and credit lines, they're going to look at your business credit, your personal credit, your financials. They're going to look at all kinds of stuff. But I am saying you could get a $50,000 credit card or $150,000 credit line at almost a lot of these vendors that are out there to build the business based solely on business credit history. So business credit gives your business the ability to fund itself. That's really the key to being able to help you get the most money at the best terms. Okay, Mark says EasyNet30 is the name. I found it. And Mark says, still struggling with choosing best NAICS code. It might take a little bit of work, especially if you're in a category. This is why we switched from SIC to NAICS codes, because SIC was before the internet. Now with the internet, like we've got all these other categories of industries that have been created, and the NAICS code is used in North America just to try to get capture as many business types as possible. But sometimes it is a little bit of work to be able to actually find the right one. And Nicole says, are you affiliated with, or am I affiliated with the government? I'm not affiliated with the government, no. Not which way or form. I used to be in the military. I used to be in the Air Force. That's about in the close of affiliation of the government as I can get. I'm not really big on rule following. I don't know. That's why I didn't work too well, I guess, in the military and government long-term. So I'm not really much of a rule follower myself. I'm too much of a rebel. So government is probably not the best place for me. So I'm not. Your business credit history can help you get higher credit limits. It's really the key. Okay. Business credit is what actually tells credit issuers the amount of limits you should have. So remember, we looked at this credit report earlier, and what we don't, maybe you would skip past, is each credit bureau gives a credit limit recommendation. The credit bureau is telling the lenders and telling the credit issuers how much money to give you. So if you're not getting approvals high enough, well, it's because part of the reason is you need to build your business credit. And the more I build the business credit, and I've showed this in a lot of streams, the more this number goes up. The more accounts get added to this report, the higher the recommendation of credit gets. So I want to be able to get as much money as possible. I've got to build business credit. It's really the key to them having a history showing that I'm going to pay them back. And it's also the key for them to raising the recommendation of how much money I should be lent. And that's the key to being able to get more money. Okay, so I want to build the history, and this is very important. I run into this all the time where people come to me, and I use this example the other day because it's the most recent. It's from about a week or 2 weeks ago. My ski instructor, Wes, right? I live in Florida. My kids have never seen snow. 2 years ago, took them to Utah. Now we go every year, and we got a ski instructor. The guy's name is Wes. Wes calls me up and says, Ty, I knew you're the guy to talk to. I don't know what's going on here. I went to my bank and tried to get an auto loan on my business name, and they said my business credit was bad. What do? I said, go here, get credit monitoring, creditsuite.com/monitoring. Let's see where it's bad. He said, it's Experian. It's bad. I had one bad account. It was a merchant processing thing, and they scammed me and da-da-da. I said, look, your problem, Wes, isn't that you have a bad account. It's that you have a bad and a good. You only have two, and half of them are bad. If you would have built business credit, then you won't have this problem. The positive would outweigh the negative. You fix the negative or you don't fix the negative. Doesn't matter. You're still going to be okay. You got to create a history. And Wes said the same thing. Every single business owner says to me, all of them say the same thing at this point in the game. But Ty, I pay a lot of people every month. And I say, yeah, but Wes, none of the people you're paying are reporting. So you're making all these payments that nobody is seeing. You got to build the business credit history, because when you get credit and you actually are lent money and giving credit lines by people that report it, now lenders, now credit issuers see that you're being given all this money. They see that you're using it. And that's the key to lenders and credit issuers wanting to give you more money. So you got to build this business credit history to create this history and also to get recommended for higher limits. You also need to get your financial statements in order. Now, don't get me wrong. If I'm going for fast money, merchant cash advances, revenue lending, cash flow financing, if I got collateral-based lending where I'm using a 401k, stocks, bonds, IRAs, equipment, inventory, we don't care about this. Nobody cares about this stuff. But if I go get an SBA loan, if I go to get term loans, then we care about this, right? We just got a $300,000 loan where we actually just locked down a credit line from our bank because we see a recession coming. So we stock up on cash as I advise you to do. And I know, and my partner Megan comes to me and she goes, you know what time it is? I said, yeah, it's personal financial time. And I got to get my personal financials ready to send to the lender. I know it's expected. So you've got to be able to put together personal and business tax returns. You have to know that for SBA loans, that type of financing, they're going to be asked for. You should have a professional actually prepare them. It's worth it. My accountant charges me. This is his check, by the way, Ed. It's here. I just got to get an envelope for it if you're looking for the money. I don't think you are because I pay you the minute I get it. But these are my invoices for my actual tax returns, and it's pretty cheap. It's $200 is what it costs me to get my tax returns done. I'm not saying 200 is not a lot of money to some people, but what I am saying is that the value of my taxes is worth way more than me trying to figure out how to file taxes online. Don't get me wrong. My personal taxes I could easily do. Like I have a W-2 and no expenses. So it's simple. I still have my accountant do it, even though it's simple. But what I am saying is have a tax professional prepare them. It's just going to go a long way to helping you, especially on the business side. And they need to see that you're paying taxes. That you don't want to not pay taxes. That creates a huge problem. There's systems like Profit First where you put money into tax accounts and you plan appropriately. And with a good accountant, you shouldn't pay much in taxes. You might even get money back because there's all kinds of things like R&D tax credits and all kinds of ways that make it easier for you to not pay a lot in taxes. But I will tell you this, when it comes to tax returns, showing 1,000 in profit versus 1,000 in loss is a big difference in my world. In my world, when you have 1,000 in profit, all kinds of lenders want to lend you money. They see that you're claiming a profit versus a loss, and they want to lend to money businesses that are profitable. Now, do lenders and credit issuers know that we write off as much as we can? Of course they do. But when your business grows, eventually you get to a point where you just can't write off stuff. You got to start paying taxes because there's nowhere to hide the money legally. And they know that. So they want businesses that have grown up enough to actually owe some money, that actually sometimes have to pay taxes. So keep that in mind when you're preparing these kind of statements. And you also have to find the balance, okay? Typically, businesses want to show less revenue and tax returns and then pay less taxes. But again, you're less likely to get funding if you're losing money. And so you got to keep that in mind when it comes to getting loans and credit lines. You also want to monitor your business credit. CreditSuite.com/monitoring is where you can go to do so. I don't care where you go, to be honest with you. But the only reason I'm telling you this is that this is so important that you do this, that we actually worked out the cheapest credit monitoring that exists on planet Earth. It's literally only $24 to be able to get set up. And this is basically everything you need to be able to build business credit for only $24. So it's super cheap to be able to build business credit with the reporting agencies. And you need to do this because you need to see what's actually on your business credit reports. If you don't, then negative stuff like what happened to Wes will happen to you, right? All of a sudden he shows up and gets denied for financing only to find he had a bad account on there that created the problem. Then he's got to go back and fix that account in order to get the financing he needs. And he's applying for an auto loan because he needs it now. He doesn't want to go through a 2 to 3 month dispute process to then apply again. So the bottom line is keep an eye on your credit so you can keep it in good shape. So when you do need it, it's ready to go. And you also need to make sure that you focus on building good personal credit. Look, as entrepreneurs, a lot of our credit is banged up because we're risk takers. By default, we're just risk takers. And our credit reports reflect that we take that risk. Mine has been trashed in the past because of businesses that have had issues or failed. So again, you got to keep up with it. Today's not the training to break down the 5 components of FICO score and tell you how they all work. I can only just tell you that it's important and that you want to understand the 5 components of FICO and work on improving every aspect of that. You can go to youtube.com/credit suite and get our training on doing this. FICO there is a business score as well, FICO SBSS. But if you're building good business credit, you're going to have a good FICO SBSS score anyways. So a lot we covered here today. And there's a lot more about fundability we'll continue to cover. But we talked about a lot of the Fundable Foundation stuff. We dabbled a little into the financial section, the personal credit report section, the business report section as well. So 4 of the 5 aspects of fundability we covered today. Again, you can go to youtube.com/credit suite and get even more training on personal credit, on building business credit, on all those kind of things. Just remember, fundability is a journey, not really a destination. It's about making sure that your business just looks as legitimate as you can possibly get it. Focus on what you can control, create compensating factors for what you can't control. If we can ever help you get financing, we never charge you a dime of money to get loans and credit lines. Feel free to give us a call. We can walk you through that process. And when you give us a call for a free finance assessment, we'll do a fundability check. We'll tell you what's wrong, what to fix. We'll help you get your business credit reports for free. We're the only place on planet Earth you're going to get business credit reports at no cost. And yes, we do pay for them. We lose money every time we give them to you for free. But for us, that's our mission. It's important that you see them. So we give them to you for free on the consultation, or we help you access them right on the consultation. And then we also do a financing qualification to tell you all the financing you can get now. And all you have to do is give us a call at 877-600-2487, info@creditsuite.com or creditsuite.com/consult to be able to set up that free finance assessment as well. Okay, and let me just go ahead. I want to make sure. Okay, work for the UK. Mark says, any suggestions on how to use credit lines where nothing is needed for the business? Want to use them? Any suggestions on how to use credit lines where nothing is needed for the business? Want to use them to raise credit lines? You can, but credit lines are harder to get. Getting a Visa, MasterCard credit cards are easy to get with business credit quality. You're not going to find lenders that want to lend you money based on business credit alone for credit lines. Now, you'll find all kinds of scams out there where they'll charge you thousands and they'll put fake trades on your account and tell you that's the case. It's not the case. They're going to want to look at personal credit. They're going to want to look at financials. They're going to want to look at business revenue. There's other factor for real credit lines you're going to have. But you can absolutely do what you're describing with business credit cards, Visa, MasterCard type credit. You can absolutely do. Veronica, hello. Thank you for coming in and saying hello. And thanks for coming in Facebook and saying hello from Florida as well. And so if you got value from this training, hit like and subscribe. That's all I ask. Tells the social channels it's good training. Helps us help more entrepreneurs. Also, make sure that you come and join us Tuesday and Thursday at 1, 11 o'clock on Wednesday. We go live. You can access us on Facebook, on our groups, on our pages. You can also access us in my LinkedIn profile. So connect with me on LinkedIn and YouTube as well. All you have to do is go to creditsuite.com. The top right of our page is all of our social channels. It takes less than 1 minute to subscribe to our channels. And here's why you want to do so. We have daily, 1 minute tips on Instagram and TikTok. 1 minute tips. I'm not sure if it's every day, but pretty common. Then we've got regular training on Twitter and on Facebook. We've got thousands of videos on YouTube. We got a podcast you can listen on the go with all kinds of advice on growing and scaling a business as well, not just the financing part of it. All of those channels are available in one place, the top right of our page, creditsuite.com. Love Ty. Thanks for that. I appreciate that. Thank you all for tuning in our very first stream here. So now I got to figure out how to end this thing. I don't know. Oh, there it is. So thanks for tuning in. I look forward to seeing you in our next training where we talk about more cool ways to get money to grow your business. Take care. Have a great day.